The US dollar was dominating the market again. On Tuesday, the US dollar index hit a 3-month high, rising 0.7% to 104.9 points. Although the US currency lost some of its grip on a Wednesday, the US dollar is not going to depreciate. The greenback was boosted by the US inflation data, which reinforced the view that the Fed would begin lowering interest rates later. The inflation rate fell to 3.1% in January, but was above forecast of 2.9%. The core inflation rate was unchanged, missing expectations of a slowdown. All these factors made the market reassess bets on interest rates, and the futures market removed the expectation of a March cut and significantly lowered the probability of a May reduction. Instead of the optimistic 6 or 7 acts of a monetary expansion, the forecast has changed to 4.5 cuts starting from June. And this is exactly the case where macroeconomic statistics are crucial. The good news is that the end of the week is unlikely to bring surprises. We'll tell you which reports you can't miss. You are watching the Trader's Calendar. This week, the US dollar's strong gain pushed the Japanese yen down to 150.50, a 3-month low. The market's expectations for Fed rates were overlaid with the prospect of the Bank of Japan ending its ultra-loose policy. Against this backdrop, speculation about the Bank of Japan's currency intervention returned to the market, and the sharp currency depreciation prompted Japan's finance minister Shunichi Suzuki to warn that the authorities were closely monitoring the market without confirming whether they would intervene again. The country intervened in the currency market 3 times in 2022 when the yen fell to a 32-year low of 152, but has not taken further action since. In this connection, the release of Japan's GDP data for the fourth quarter is highly likely to spark the dollar-yen pair's volatility early Thursday morning. Notably, Japan's economy contracted by 0.7% in the third quarter, and this was the first contraction in GDP since the third quarter of 2022, amid rising price pressures and increasing global headwinds. Thursday's data is expected to show that the country's GDP rebounded to 0.3%. If the report disappoints the market, the yen may move even closer to the key level of 152 points. Meanwhile, traders should be careful when building a trading strategy on the asset, as the reaction to the data may be ambiguous due to the poorly speculative movements. In addition to the yen, Thursday morning may be noteworthy for the British pound. The pound has dropped significantly against the US dollar since the beginning of the week, and the British currency slipped below 1.26 after UK CPI data showed some easing in price pressures. Annual inflation held steady at 4% in January, below market forecast of a 4.2%, suggestion that the Bank of England may be in no hurry to cut interest rates. Domestic data was joined by data from the US, and the pound was largely overshadowed. On Thursday, the pound will face another test with the release of the UK GDP data. The British economy contracted by 0.1% in the third quarter of 2023, compared to initial estimates of an unchanged value. Data for the second quarter were also revised down to show no GDP growth. Market expectations for the fourth quarter point to a 0.1% contraction in GDP. If this forecast is met, the UK would be in a technical recession. However, if the data does show growth, the pound may recover some of its losses. On Thursday afternoon, the US dollar index will be in focus. It will be tested by fresh data on unemployment claims and the retail sales report. The retail sales change report will help to gauge consumer sentiment as the consumer strength supports ongoing inflationary pressures in the United States. In December, U.S. retail sales rose by 0.6% from November's 0.3%, the largest increase in 3 months. Based on the fresh data, the market is expecting a decline in consumer spending and retail sales to come in at minus 0.1%. If the data comes in line with the expectations, it may provide some support to the US dollar. However, if it comes in above expectations, the US dollar index may extend its dominance. On a Friday, markets will keep an eye on the dollar-ruble pair. As an interest rate decision is expected to be released, the Russian ruble has stabilized near 91 per US dollar at this time, beyond by rising oil prices. However, the ruble remained near a one-month low as the country's finance ministry returned to buying foreign currency and the expense of sales in early February. The key interest rate is expected to remain unchanged at 16%. In addition, markets will closely watch for important hints on the timing of monetary easing and capital controls. The weekly will end with the release of the producer price index for January, which may have an impact on the US dollar index and major currency pairs. US producer prices unexpectedly fell by 0.1% in December, dragging the greenback lower. The new report is expected to show an increase in producer prices. If the data is in line with the forecast, the US dollar will get another boost, but if prices cool down again, the index may retreat. And this was a brief review of key economic events from InstaForex analysts. Follow us and make profitable trades. See you online on our channel soon.